Great, guys. I'll just take you guys through a simple walkthrough to the entire conversation so that it's more easier for everyone to speak, right? I'm sure many of the other speakers have spoken about real estate in general, but one of our core thesis for everything was to create a passive rental income portfolio for investors. To what RealX does, to what other platforms, etc., do, be very, very clear that there is a good chunk of investors who want to have their money safe. They don't want to take structured debt as a portfolio for themselves or a part of the wallet share. They don't want behind these risky investments. They want to into more safer asset classes. I'm sure most of your clients would also love. I think Indians love rental income, interest income, dividend. Dividend is a very smaller amount, irrespectively today, but interest income, and this is what it is. So when we went deeper, we realized investors invest tremendous amount of money into gold, into FD bonds, into residential real estate as an investment, not as an end use. That's a staggering amount of money. And when we went deeper, why are people investing in residential real estate? Is prima facie because that's the only thing in real estate which is in the range of about 1 to 5 crores at maximum, which they could invest. I mean, owning a commercial real estate is of literally a far-fetched idea to most of them, and that's why we are coming in trying to bridge the gap by making them access, giving them access to high rent yielding grade A commercial real estate as such. How has CRE performed over other asset classes? Barring last year, best in terms of its performance, and that last year's performance you can see now because CRE has really outperformed. You can come to Bangalore and you'll not find office spaces anymore because everything is taken apart, taken right now. So best two asset classes in terms of performing for over a decade now, ever since the 2008 crash happened, and this is what it is. And now we are entering to a recession, at least that's what the world says. Again, best time for people to start looking at commercial real estate as an investment asset class. I think we'll become great bargain hunters to great deals. There'll be a lot of distress in the market, which means better investment returns for those who have a 7 to 10 year kind of an investment mindset. So this is not for your clients or for people who have a 2 to 3 year investment mindset. This is ideally for good 5, 7 year, 10 year investment timeframes is what is recommended for investors as such. So CRE has not been mainstream prima facie because of its high capital requirement, because it's expensive as an asset class. It's 30, 40, 50 crores of a floor of a building, not the entire building in itself, of a grade A building with a grade A client. So that has been one of the biggest deterrent why not many people have invested into this segment. Second is inaccessibility. These are not properties which you'll find on your magicbricks.com, your nobroker.com. These are really expensive properties which are traded in smaller communities, smaller groups of ultra HNIs who have 40, 50 crores to disburse and buy such assets. Then comes concentrated exposure as wealth advisors, and as you guys are, you would always advise people to diversify, but real estate never gives you an opportunity to diversify. That's why we are trying to come in and helping people diversify their portfolio across multiple assets. And then the whole bigger challenge for everybody, especially non-resident Indians, and we have 25% of our platform as non-resident Indians today, is asset management in itself, right? So once you buy the property, how do you manage the asset? Whether you are in India or abroad, it's a painful task for people, right? Like for instance, after you acquire, taking care of property tax, insurance, leasing, releasing, etc. Because the ones who are investing in real estate, it's not their core business. They're actually parking their passive money. The ones who are into core business actually make and sell and leave, right? So that's the whole difference. And where asset management and tenant management, especially in today's world, tenant relationships are a very, very critical thing, which people are not aware of as such. So we as a platform bring in 25 lakh rupee ticket sizes for investors. We create an SPV which goes and acquires the property, a very institutional way of doing, pretty much copying to what most of these large funds operate by floating a trust. The trust eventually floats an SPV to buy the property. What we do different is, instead of a blind pool investment where investors are not aware where the money is going, and there have been clear precedents, whether it's Aditya Birla, Unitech, CIG, multiple funds have lost investor money. Here we are going up because they've invested into under construction projects, etc. Here we are going after completed rent yielding grade A assets, leased to grade A clients also at the same time, right? So that's pretty much the business model. We float a company, and then investors, instead of a fund where they had a blind pool and the fund manager was taking a call, investors take a call by choosing which investment property they want to invest in multiples of 25 and 5 lakhs beyond, right? So that is the bigger opportunity as such. We today work with close to about 1,000 plus odd wealth managers in India, including IFAs and certain boutique wealth firms as well, who offer this as a financial security to its customers, as in real estate investment product to its investors, because most of these guys with whom we work with right now don't even get an opportunity to sell real estate to them or advise people on real estate or even manage their real estate portfolio in a short way. So it's 25 lakh rupee investment minimum. Everything is online from an investment standpoint, right from signing documents to reviewing the entire paper documents before of the property, whether it's legal opinion, etc., plan sanctions, etc., etc. The recent sale lease transactions of a particular property, we plugged in with PropStack, which gives us that access to investors for them to track on a real-time basis what's the other sale and lease transactions which have happened. And then we help them sell their entire asset at the same time. Now, again, reiterating, this is only for those people, and you should advise only for those investors who have a wallet share of at least 5 to 10 years. Anything lower than that, absolutely not a recommended product for them, because we're not here only for 8, 9, 10% rental returns. We're here for the appreciation. And appreciation is a long haul game. You need to stay invested before a market matures, and only then value appreciation can be created for investors. Now, how do we choose our properties? Very critical is we go through a stringent process, understand the location advantage, the specs of the property, who are the other tenant profiles in the property before we take a call, understanding it, whether it's a back office, whether it's a product office, whether it's a front office, etc., etc. Take care of entire due diligence. So typically we go after grade A plus assets, which are already leased to grade A clients. So 4 layers of due diligence is already done. A developer does his due diligence. Then the bank which funds under construction does its due diligence. Then the tenant which is picking up a property does its due diligence. And then we come and do another layer of due diligence, and then we acquire a property. So a good chunk of due diligence is done. So, that way legal, at least from that point of view, is fairly simple and straightforward. Tenant research, very important. We look at who are the tenants, their credit rating, their financial capability of paying, what are the actual businesses they are operating from there, the stickiness, etc. accordingly. Do a financial analysis of the entire investment over a 10-year duration. What is the IRR returns we can make for our investors? And then we propose an opportunity by listing after it gets approved by our investment committee through our platform. We partnered with PropStack, which gives access to all the sale, lease, loan, mortgage data, which again is shared to our investors before we decide to invest, so that they're aware, okay, if I'm buying, who's the neighbor, how much rents are they paying, how much am I getting, etc., etc. All that information is there in front of the hands of the investor before they decide to invest. So our structure is clear. We don't follow any NFTs, tokenization, etc. We wanted to keep it as institutional as possible as of today. Investors invest through an escrow account, which we've created for investors once they do a KYC on our platform. We move the entire money to an SPV by allocating 2 types of securities, equity and debentures. The reason we do compulsory convertible debentures is so that it's pro rata to the rent, the coupon rate. So whatever money which the asset is sending to the SPV can pass it to the investor on a month-on-month basis. And Strata acts as an asset manager. We don't invest in any of our properties at any given point of time because we feel it's clear conflict. Because of the liquid nature of our investment product, we don't want a situation where, hey, Strata knows something's going wrong and it downsells it to an investor and walks out. So hence we don't invest, and we find that to be clear conflicting as such. The investor dashboard is something I want to show you guys. It's a clear dashboard for investors. Likewise, we have a partner dashboard as well, where you as partners can do a KYC. You either need to have a RERA or some kind of a SEBI registration or a CS certificate, and you can partner with us and you can offer this as an investment product to your clients. I'll take you guys through that later, but otherwise investor can open multiple family accounts and log in and invest through his multiple family accounts, because we realize most of the investors, the men decide from a tax planning standpoint through multiple profiles. So no point having multiple login ID password, one login ID password, and you can track everything. All your transactions, buy, sell, rent, interest transactions with the UTR number, etc., is available on the dashboard itself for you to see how much money the company made, how much money got distributed to me on a month-on-month basis, what is property tax, what is interest on security deposit, etc. All made available to you. The reports, your monthly investor rent report, TDS report, along with the TDS certificate for every opportunity, quarter on quarter is available. So for his tax planning, for advanced tax, and his income tax filing, including consolidated report, which again goes on email to investors as well. And likewise to you as partners, you'll get access to your investors' report so that you can also help him, because many of them are even financial advisors rather than just wealth managers. Documents, again, all the property documents, the share certificates of the SPV, again, all are available. We obtain valuation certificates every 6 months. So even that is available on the dashboard for the investors for them to track at any given point of time. And whenever they want to set up a call at any given point of time, it's simple. Again, for people who invest, via partners, you can set up a call through the partner platform very, very simply, so that it can be a seamless transaction before and post investment for the investor. So that's how the whole dashboard operates for investors. Very, very transparent. There's a mobile application as well, which investors get as an access for them to start reviewing things. What all we handle for investors, take care of the entire lease management, tenancy management, asset upkeep. We take a half-yearly valuation report for investors so that they can track their investment returns and understand what is going on in the market. And then there's a dashboard, which I just showed you, which takes you through everything. For NRIs can invest from the NRE or NRO accounts, but we transfer rents to them only to the NRO accounts on a month-on-month basis. And TDS is subject to the double taxation avoidance, or the TRC, is accordingly the TDS is deducted for the investors. Now, very important question is, how does one sell and who it is for? One is, at the end of 3 years, we call for a simple online poll and ask our investors. If majority say yes, go ahead and sell the asset, then we go ahead and sell the asset. Otherwise, we continue enjoying the rents for our investors. Otherwise, investors can even do a private sale transaction, which we can also facilitate for them. A friend can sell to another friend if required, and a resale platform. So we have a 6-month-old resale window, and there's a 6 months lock-in, and where one can look at liquidating its holding during the during those resale windows which we create for investors as such. We facilitate for over 11 crores of resale. These are investors, especially during the second and the third wave, which wanted money. But again, reiterating, not meant for investors who are parking that wallet share with a 2-year, 3-year, 4-year mindset. This is minimum 5 to 7 years. Otherwise, it's not ideal as an investment asset class. Who can invest? Everyone. We don't accept money from trusts as of today. From minors as a second approach are the only 2 things which people cannot invest. Rest everything else is absolutely permissible through our platform as of today. So minimum is 25 lakhs. 5 to 7 years is the minimum recommended investment time frame. Average rental returns we've been able to generate for investors are at least 8% as minimum, which goes up to 12%. And IRRs can be from 10 to 16% as an average. We don't leverage our investments today. The next property which we're doing is going to be a leverage opportunity where investors will have the ability to leverage their investment as well, which will enhance their post-tax returns and obviously their IRR as well. People ask us a very common question, hey, what's the difference between you and a REIT? I would rather invest in the REIT. I mean, a simple answer is, why do people buy stock when they can buy a mutual fund, etc., right? So, but having said that, the core difference is REITs are publicly traded, which means it's subject to its stock market volatility as well. This is directly, and we've seen as a classic example, look at Embassy REIT as an example, listed at 300, went up to 480, today trading at about 360 rupee levels. Investors don't want a part of their real estate portfolio investment to be as volatile as it is and seeing it on a regular basis. So imagine an investor investing at 400 rupees. He's in red today and he's making sub 5% returns overall on his investment, right? So that's how REITs are. There's unfortunately not a direct correlation to its underlying real estate value, because at 300 rupee, you were supposed to make about 7% returns. When it comes to 480 rupees, you effectively made just 3% returns on your investment returns. And now at 360, you're making 5.5% as investment return, right? So there's no direct correlation. Did the real estate price underneath jump from 300 to 480, crash to 300, and is now trading at 360? Unfortunately, that's one of the core problems of what the REIT has. So here investors have direct control, which property, what's happening, etc., etc. So it's more direct real estate buying, just that it's a financial instrument versus a REIT, which is a pool where you have no idea who the tenants are, what's happening. They have hotels, which can have its own cyclical risks and multiple other challenges also at the same time. Your entire money gets distributed to the investors on a month-on-month basis versus a REIT, which should only distribute 90% of the net distributable cash flows, which means REIT also have a lot of loan on their books. So only after whatever is paid out, whatever spending is what 90% they have to distribute. Not everything needs to be distributed to the investors. Here, no loan, which means 100% is completely controlled by the investors as such, without any kind of debt. What are the risks? Very important to understand the risk. Pros can be great, but it's always important for you to understand what are the possible downfalls. Capital risk is low because it's effectively going into a real estate itself and grade A plus asset, and we generate rental income. So we buy pre-leased assets, which means if there's no tenant, we don't invest as such at any given point of time. And ownership is with the SPV itself. Liquidity risk is medium. Like I said, minimum investment time frame is 5 years, and it's not gold that you can liquidate tomorrow. So it's highly recommended for investors with a wallet share of a long-term, how real estate is in general, or long-term and illiquid this is, but obviously we're creating a lot of liquidity windows through resale and private sale windows through which people can liquidate their holdings. Real estate risk is low. Again, we take care of due diligence from premium tenant, from premium law firms, and likewise reputed companies who are occupying our properties also go through scrupulous amount of legal due diligence before they lease a particular property. And tenancy risk is low. Again, in comparison, if you had bought the property yourself versus me, I'll outright beat you in terms of asset management because that's what my core business is. We buy pre-leased assets, and we're very proactively, especially with the data which we have, we are very proactively tracking what's happening, and we are able to pitch to those tenants to lease our particular property also at any given point of time. So just about us, it's been just about 2 years in terms of an operational business which we run. We have 2.6 million square feet under management, 700 crores, which we manage of our investors' money, about 2,000 investors on our platform. We have tenants like Puma, Westside, Wakefield, Capgemini, Randox, Swiss Bank, etc. These are all the kind of properties. So in true sense, we've diversified our investors' money in a factory, in a warehouse, in an office space, and a retail, and not just in tier 1 cities, but even in tier 2 cities like a Jaipur market as well, is what we've successfully done. So, if we have a couple of investors who invested in all our properties. In true sense, they've diversified their portfolio and have hedged their risk with any one industry or one market or one micro market or one asset class going through a downfall at any given point of time. Just our last properties which we had funded, the Pune one was leased to Tata Autocom, Westside, KT was a Puma opportunity, etc. These are all the kind of deals which we've been doing on our platform on a regular basis as such. Our leadership team is people who come with varied years of experience into that domain. I was a lawyer and from real estate background as family as such, but understanding the criticalities of legal is I think what 80% of real estate is. 20% is understanding the commercial side, I think, which is not rocket science in general. Priyanka was earlier with WeWork as the real estate acquisition analyst. So all the acquisitions which WeWork has done is all done along with the team which she was managing. Niyar heads our investments. He was the vice president at Piramal prior to this, and a bunch of other people who come from varied years of experience from asset management, leasing, etc. Through our platform. We've raised 2 rounds of funding from premier tier 1 VC funds called Elevation, which was early investors of Swiggy, Make My Trip, Meesho, Book My Show, etc. Kotak Investment Advisors is the largest private equity arm in India in terms of domestic real estate fund. They manage close to $5.5 billion. Mayfield is an American VC fund, early investors of BharatMatrimony.com, Licious, etc. And Gruas is a VC fund of Nikhil Kamath from Zerodha and Abhijit Pai. All our property documents, we don't maintain ourselves. It's all kept with universal trusteeship. It's an ICICI portfolio, so it's all maintained by them. Any investors who want to physically review anything needs to give us a couple of days heads up, and they can go and physically review the documents. Otherwise, scanned documents are all available on the dashboard. Our trustees are Vistra. We bank with ICICI Bank and we bank with HDFC Bank for all our SPVs as such, right? So that's a quick thing about what we do and how we've been working very closely with a lot of partners like y'all, and offer this as an investment product to their end investors and clients as such. Yeah, that's about it.